The topic of this video is how to use the 2023 tax bracket to calculate the amount of tax that someone might be responsible for. So the United States tax system is set up as a progressive tax system, which means that they're not going to tax you one rate. As you make more money, you would fill up different, let's say, buckets of funds, and then each of those buckets has their own corresponding tax percentage. So the first bucket, if you would call it that, is this right here. And this bucket holds $11,000. Anything, that first $11,000 that you make, you're going to pay 10% of that in tax. So what you would do is you would calculate $11,000 times 10%, or take 10% of that, and you get $1,100. So this section right here that I'm going to fill up, this is all, and really we don't go much past this because it gets too much money, but this is all tax, okay? So if you fill up that first bucket, you are guaranteed to pay $1,100 in taxes. The next bucket starts at $11,000 and then moves to $44,725. That's this bucket right here. So because it didn't start at zero, because it started at 11,000, you would first have to figure out how much money is between these two dollar amounts. So we would naturally subtract. That dollar amount is $33,725. So that's the amount of money next you would have to make to fill up that second bucket. If you were to fill up that second bucket, you would then pay 12% of that amount of income. So $33,725 times 12% would give you the tax that you would pay if you filled up that bucket. That amount of tax is $4,047. And you can continue this system. So if we were to have filled up the third bucket, that would be this bucket right here. It started at $44,725. It ends at $95,375. So if you were to subtract those two numbers, which I don't have at the top of my head, give me a second, $95,375. That contains $50,650. If you were to fill up that bucket, you would pay 22% of that. So if we do 50,650 times 22%, you get 11,143. And one last bucket that we'll do, because I don't know how many situations we'll have where somebody's making more than 182 grand, but this bucket starts at 95,000 and ends at 182,100. So this is $86,725. If you were to fill up that bucket, you would pay 24% of that, which is $20,814. Okay, so this is the basic system that we're going to use to come up with our amount of tax. So this example that I'm going to give, it's from last week's activity, and it was talking about right now nationally, if you make certain amounts of income based on your education level. So let's just take trade school, for example. Let's say we are going to look at this section right here, okay? So if somebody made $50,000 from a year at trade school, we would first, if we wanted to figure out how much tax they would be responsible for, we would first look at this tax bracket to figure out where does $50,000 kind of lie, right? So to do that, you want to look at your income system, which is, your income is right here. This is all income, okay? So we want to look in this section at the income section to see where does $50,000 land, which $50,000, let's say, is right here. So that means that what we did was, if this were like water or liquid, we like turned the hose on to fill $50,000, and we filled all the way up to the top of this bucket, and it spilled over into this bucket. And then $50 filled all the way up to this bucket, right? So this whole bucket is full. This whole bucket is full. But $50,000 doesn't fill this entire bucket. It probably is only like to here, right? It's just the very bottom of this bucket. So what that means is, because this bucket is all the way full, we're going to pay this full tax amount of $1,100. Because the second bucket is full, we're going to pay this full amount of $4,047. But because this bucket is not full, we have to come up with the partials. So to answer this question, there are 2 buckets full, which means that I'm going to pay $1,100 and $4,047, but the third bucket I have to calculate. So to do that, I need to figure out how much income is actually in the bucket. So what you're going to do is you're going to take that dollar amount that you made, so $50,550, and subtract all of the money that I've already accounted for, which is $44,725. So I'm going to subtract that out. So 50,550 minus 44,725 is $5,825. This is still income. It's just the income that's at the bottom of the bucket. And then I know that I have to pay 22% tax on that. So I'm going to multiply this by 22%. When I do that, I get $1,281.50. So I would add that to this number. So the total tax that this person is being held accountable to is $64,028.50. If we were to choose a second example, let's say somebody with this doctorate degree, let's say, right? Let's say if we looked at this doctorate degree, this person has made $108,000. So if I come back up here to my example and I try to figure out how many buckets have they filled, well, 108,000 is somewhere in this section right here. So what that means is they've filled up buckets 1, 2, and 3, and there's a partial in this 24% bucket. So what I need to do then is I know for sure I'm going to pay these 3 tax amounts at the bottom because I filled 3 buckets. So I filled 3, which means I'm going to pay $1,100, $4,047, and I'm also going to pay $11,143. But the fourth bucket I have to compute. So to do that, I now have to come back to this 316, and I have to get rid of all the amounts I've already paid tax on. So I go backwards to the previous income, minus 95,375. So if I do that, 108,316. I get $12,941. That is the amount of income in this bucket. And now I have to calculate the tax on that. So times 24%. So this is $5,105.84. So 3105.84. And then you have to add all the previous buckets. This person is responsible for $19,395.84. Okay, so that's the first part of this. That's what we've been working on in class, is trying to figure out how to use this tax bracket. Okay, once you figure that out, the extra thing that we added in today is what's called a deduction. Okay, so a deduction in 2023, you can either itemize your deductions, which that means this is a choice. This means you add up qualifying amounts and you kind of look at that total, okay? Or you can take the standard deduction, which is standard deduction is a set amount. For right now, it's $12,950. So what you're doing is you're comparing these two options. You want the larger number because this is going to be, let's say, like free money or money subtracted from your income before you do your taxes. So the key here is, let's say you can itemize for $20,150. Well, when you compare these two, would you want to reduce your income by $20,150 in regards to reporting it to the government, or do you want to reduce it by $12,950? Hopefully, most of you are like, oh, I'd want to report that I made less money because then I would pay less taxes. Right, that's exactly how everyone would think. So if you were to say, let's say you brought in $100,000 in a year and you could itemize for this amount, you would then immediately take that deduction off your income. So you would take $100,000, subtract $20,150, and then when you actually go to the bracket, this is what you're putting on the tax bracket. Okay, so this is the important thing, is that you're paying attention to what you can itemize versus what you can do with the standard, right? Let's say your itemized actually only totaled, $2,150. Well, in that case, if you're comparing these two numbers, you definitely want to choose the standard deduction because the standard deduction is the larger number. So in that case, again, let's say you make $100,000, you would just subtract the standard deduction, which everybody it's available to everybody, $950, and then say, oh, okay, well, then the income that I'm reporting to the government is this, and this goes on the tax bracket. Okay, so what eventually we end up saying, and this is a preview to what's next, is that this number or this number, depending on the situation, these are called your taxable income. They are what you're going to actually report and pay taxes on. That free money is not going to be taxed, which, remember, is different than a credit, because a tax credit, just to review, a tax credit comes off taxes at the end. I almost said like the idea would be it's kind of like a coupon, right? So that you get your total tax, and then you might say, yeah, but I have, a tax credit for adding solar panels, let's say, for solar, and that's $500 off. So these get applied at the very end, but your deductions come off first. It reduces your income so that your taxable income is less than your actual income. I hope this helped clear up some of the questions. The more practice, the better on these bracket questions. They are confusing. There are lots of steps, but I definitely think it's there to help you. Let me know if you need anything.